Let me welcome him on board. Erez Israeli from Dr. Reddy joins in on the show right now. Erez, how is it that you're experiencing the pricing pressure in the US markets? Any signs of stability? Also, what is the outlook then on growth for the full fiscal?
So the pricing is as a results of the mix of the portfolio looks favorable this quarter. Having said that, the numbers, the market is the same. So it's the same type of business model, the same type of customers, and likely when there is a competition for products that we have, we will see price erosion, and that's the same comes when we are launching a product for other people. So that's likely to stay. But let's say for us, as a result of the current portfolio, current situation about the products, it looks better this time. We are going to continue to grow in all the markets, including the United States. We are in the double-digit mode through the year with more than 25% of ROC as well as EBITDA. Actually, we finished the year with 30% of EBITDA and 35% of ROC. And we see nice momentum, and likely that also in FY24, we will continue to see momentum in our growth.
Right. Could you tell us what was the share of generic Revlimid in the quarter gone by? And going forward, can we expect higher volumes?
I believe that you already see the contribution of the product, and likely that these products will continue to be meaningful for us. May fluctuate from quarter to quarter as it's related to the type of orders that people are placing. But we are absolutely see that as a good and important product for us also in the next coming quarters.
Well, let me talk about the India business now, because that's also been very volatile of late. Could you talk to us about how FY24 is likely to shape up for India business specifically?
What leads the growth in India for us is the focus on meaningful brands. We have certain therapeutic areas, certain brands that we are focusing on, going for all the tier cities in India. And in addition to that, we are very busy with launches of new products and with licensing in and BD activities that will bring more products to India for both what we call the Horizon 1, which is the classic pharmaceuticals, as well as Horizon 2, which is involved areas like digital, like gene therapy, like cell therapy, like nutraceuticals. So we see India as a very important market for us, a leading market for us, and we are planning to grow double-digit, not just in the next 12 months, but also in the next coming years.
And finally, your margins have dropped sequentially. Down the line, do you think we can expect a bounce back? Do you think you can achieve those 30% levels?
So margins are primarily function sometimes on one-offs and tax rate that was a bit higher due to all kinds of one-time events. But in general, our margins are very strong. EBITDA of 30%, ROC of 35%. What we are guiding that we are always aiming for the 25% EBITDA and 25% ROC, as we want actually to take the product and invest into the future. So likely our business is very profitable. Being an organic company, a company that is launching its own products primarily, we like actually to increase our investments while allowing that margins to continue. So that's, of course, will boost the growth in the short term as well as in the long term.
All right, Mr. Israeli, thank you so much for taking time out and giving us a clearer picture there on the quarterly numbers. That's the management saying that as of now, they are seeing momentum for new launches in the US. They will continue investing in organic growth and are aiming for a 25% EBITDA margin going ahead.